Good evening, everybody. Welcome to the webinar. We are waiting for Swaminathan sir to join in. Number two is I will request everybody kindly post the link of the webinar in all your respective groups and to your friends whom you think that they are going to get benefited with this technique. I have at least implemented some money in Heikenashi vanilla system. So we will be having a doubt clearing as well as a revision session for all of you today. So please try to understand. It's a very simple concept, very simple rules, and very nicely to be done, because most of the people have not understood the concept properly. That's why they are not able to implement it properly. So there is a very basic rules for everybody. Please try to understand it. As per the protocol, I'm still requesting everybody to kindly switch off your videos and your mics. Today, I'm going to be the host, and I'm known not to be very, you can say, liberal kind of a host for these days. And I keep on removing in a matter of seconds. I will not say this again to anybody. The super admins, some people who are senior to me, I cannot say them anything, but for anybody else, my tolerance is practically nil. It's practically nil. So you can take it for this. If you want to get removed from the class, kindly switch on your cameras or your mics. It will be in matter of seconds, I will remove you from the class. It's only after Swaminathan sir allows it. He is the supreme here. We are all here to listen to him. Once Swaminathan sir says, yes, you can unmute yourself, then we will allow you to. Till then, please make it sure that this thing is totally on a mute mode. Good evening, Swaminathan sir. Are you there, sir?
Yes, sir. Kamal sir is there.
Yeah, I'm here.
Okay, sir. Sir, you are there, sir. Please. Let me make a small. Good evening, everybody. Welcome to a webinar. At the onset, I would like to thank Swaminathan sir for his consent to take the webinar for all of us on the vanilla Heikenashi method. I, being the personal follower of it, I did find good results in it. So I requested Swaminathan sir to take a revision webinar for all of us. Please try to listen to it. Sir is very patient. He will take up your queries at the end. Please do not try to break the flow or try to confuse yourself. First, try to understand his concept. He will be very slowly and going and telling us everything. It's a very simple system, and please try to understand it. Sir, it's over to you, and I'm muting myself.
Okay, thank you very much, Dr. Kamal. Let me just get set up here and then we will start talking about what we do. All right, shall we start?
Yes, sir. Please, sir. Go ahead.
Yeah. As Dr. Kamal was mentioning, this is, I would like to make a few corrections. This is not a Heikenashi method. Heikenashi is just a tool we use so that we can find the correct entry points and exit points for our option trading. We are predominantly option buyers. So if there are any option sellers, you could also use this. But somehow I'm not very convinced about option selling and the kind of return it gives. And after you see the returns, the option buying can generate, I hope you would also change your mind regarding deploying more of your money and getting less money as returns. During this entire process, we will talk about what is our primary method. This can be explained in less than 5 minutes. I'll explain it in less than 5 minutes. Then we'll talk about the application for this method in various tradable instruments like currencies, commodities, and all those things. And in addition to that, we'll talk a little bit about trading stock options using this method. And of course, we'll also talk about various time frames you could use in trading. You could use a daily time frame, the weekly time frame, etc., depending on your perspective of your investment horizon. Now, let's start with the first item on the agenda. The Heikenashi method is something which can be explained in 5 minutes, I said. That's exactly what I plan to do. What we do is at the open of the market session, we already know the opening price because the pre-open market ends at a certain price. That price usually is the opening price for the market. The pre-open market session is conducted mainly for that. It weighs the demand and supply through overnight actions and aftermarket orders and arrives at a consensus price at which the market should open. Since we already know the open price, what we do is we mark a line at the opening price. It need not be super accurate, so don't worry about whether it's accurate or not. It really doesn't matter much, though I do want to split hairs here. After we draw a line at the open price, what we do is we switch over to the 15-minute chart and look at our price action after the market is opened. Now the market is trading predominantly above the price opening price. That means it is forming a green candle. So we can expect a bullish price action scenario. And if it is predominantly trading below the opening price, then it means that it is forming a bearish scenario with a candle being red. It's a simple common sense. A price below the open is always a red candle. And above the open is a green candle. We all know that. Now, once we see this, we start looking for a buy opportunity. Supposing the price is trading above the open price, we look for a buy opportunity on the call option side. If the price is trading below the open, we look for an opportunity to buy the put option. To do that, I have taken the close to the money kind of options strike prices, 32,900 and 32,800. Now this number could change. The strike price could change depending on what market does tomorrow morning at open. It could open gap up or gap down, in which case I'll adjust my strike price accordingly. Now, to find the buying and selling opportunities, we have some rules in Heikenashi. what we do is we open up the charts of both these strike prices, call option and the put option, and we turn on the display to Heikenashi mode. When the display is in Heikenashi is showing a red candle, it tells us that there could be an opportunity to buy a call option today. Now, where will I buy it? I will buy it when during the red candle formation, Heikenashi, I switch over to the normal candlestick chart and wait for any candle to break the high of the previous candle. In this case, the buying signal came to us after the third candle. The third candle had formed as high, then the fourth candle formed. It started going down first and then it went up, triggering our buy order. Let me zoom it in for you. So you would have bought above the high of this candle. And the second part of the equation is the put option side, where we have initially two green candles forming, meaning put option prices are going up. We do nothing at this time. Whenever we see a green candle, we are not interested. We are interested predominantly in a red candle being formed and one of its highs being broken. We don't know which of the high will be broken, so we keep watching. And in addition to that, we have some parameters by which we see whether the price is the entry price is coming closer to the support or not. Like if let me just draw a random line here. Sorry about this. Let's say this is resistance and this is support. Now this entry which I get here doesn't fit my parameter of buying at support. What we are simply doing is we are trying to use the price action concepts of buying at support and selling at resistance. Now, if I don't buy at support, if I buy it somewhere else in the middle of support and resistance, obviously my risk to reward ratio will not be very great. The risk will be much higher and the reward will also be much lower. So it's not a very ideal trade to take. So this also means that we need to have our support and resistance lines drawn out before we start the trading. And let me just quickly sum up the rules. The rules are very simple. You never buy against a green Heikenashi candle. If you see a green Heikenashi candle, don't even think of buying. If you see a red Heikenashi candle, don't even think of selling. You're supposed to be thinking only of buying. These are the two rules. Now, when to buy is the next part of the rule, which says when there is a red Heikenashi candle, buy above the high of a normal candle. And likewise, on the put side, we are not interested in selling anyway. So we are not interested in the green candles. And when the red candles come up, we know that there could be an opportunity to buy puts also. So we keep on tracking our prices and following it down until it comes to its support. There are many ways you could identify when a price has come near support, like the candlestick size reduces, which means the momentum reduces. After that, you get into a trade. Right. Same principle applies in any price action theory. Right. As the candles come towards support with decreasing intensity, that support is likely to hold and it is likely to give a bounce. The same principle we are using here. So the four rules are never buy against a green Heikenashi candle, never sell against a red Heikenashi candle, buy above the red Heikenashi high on the normal candle. Whenever there's a red Heikenashi candle, you don't need to keep staring at the red candle all the time. Once it is formed, there is a momentum to the downside building up. So you just need to switch over to the normal candle and see where the price is breaking the high. And after that, you will take entry with a stop loss of the low of this normal candle. Entry price is above the high of the normal candle. Stop loss is the low of the normal candle at that time on the entry candle, let's say. These are our rules for buying and sell, buying the options. Later we'll talk about selling and how it can be applied to futures and currencies and commodities. At this moment, let us stick on to the option side. The reason I'm doing this is I found Banknifty options has the potential to give you more than 100% return. Of course, on days when you have sideways movement, nothing will work. You will get your stop loss hit. That is part of the trading game. You really can't worry too much about it. But if you do catch a right trend right at the beginning, you will be able to get returns of more than 100%. Like what happened today. On the call side, you had an entry at around 214 rupees and it went up to 447. So slightly more than 100% your return you would have got. Then on the put side, you see that there is an entry which happened a little bit later as the call side started pulling back, and you would have got an entry here at this candle high, which is 142.4, and it did touch a high of 287. So you got another about 100% return. Now, does it mean that you will be able to capture all these returns? Does it mean that you will never have any problem in trading? Well, no. You're bound to have problems. You're bound to have self-doubt. You're bound to have questions about whether your entry is right or wrong. Should it have been this candle or the next candle? All those questions will come up. But as you trade this method, you will know that since your stop loss is pretty low, like here you're almost at the money for tomorrow being the expiry, you're having a 22 rupees stop loss for a bank nifty option trade, which is pretty good in my opinion. As you go deeper out of the money, you will start noticing that you are able to trade with stop loss of less than even 10 points, which means the risk being so practically very low, you have all the room to experiment, make a few wrong trades. Don't beat yourself on the head with it, because wrong trades will happen to everyone, including the best of traders. But what ultimately matters is that you catch the meat of the move, which happens at the lowest possible entry price with the lowest stop loss, which in this case is this candle I'm pointing at. In the case of a put option, I'll be pointing at this candle. I don't know how to get it. Okay. I point at this candle and say that this is where you would have got the entry. Now, why do I say that before, without looking at the Heikenashi candle? Because it's a kind of experience. And there are a few tips and tricks I would want to give you regarding how do I know when to get off this bus? How do I know that this is the bus which I'm supposed to board? Now, to do that, you look at your past candles and see that almost half the day has passed. In a given day, on a 15-minute chart, you have 25 candles, right? Which means roughly around 12 candles have already passed, and there was only one green candle. Rest of them have been red candles. Typically, it's a off-the-cuff way of calculating your RSI, like 12 out of 13 candles are red, which means RSI is pretty low at this stage. It's actually 1 divided by 13, which is RSI is 0.07. Again, don't hold me to the exact number because it will not be the exact RSI number. But I do know that when I look at this kind of a number with only one, maybe two green candles during this entire thing, I know that the price is deeply oversold and any time of buying could come. And this is where I get ready to look for a buy opportunity. Likewise, having bought, where should I sell? Now the price has moved sharply all the way up, right? If I only look at these 5 period candles, I will know that I have predominantly green candles, which means price is nearing a overbought zone. There could be a chance of a reversal. Now, is this how we normally trade? We don't. Most of the people who use this method don't even think of this method. I'm just giving you an extra tip on this. When you see that predominantly you have green candles, you know that RSI is racing toward the top. At some point, there needs to be a pullback, there needs to be a corrective move, and the price is bound to come down. To actually get off the bus, what we do is we look at 1 hour Heikenashi candle to mark out our support and resistance lines. Okay, I'm too lazy to do it on both sides. I'll do it only on one side. See, what you do is you have the past option data, which is not much anyway. Wherever you see the price, a red candle, when you see, it is supposed to make lower lows, right? Where it doesn't make a lower low, you mark a line. All right. And here, I don't know, 333.10, 333.10. This was exactly a double bottom. So let us move this line a little bit. Then whenever you see a green candle, you look for places where it stops making a higher high. You'll find many such instances like this. Because in a green candle scenario where the price is in an uptrend, you expect the price to make higher highs. And if it fails to make that higher high, you know that it's encountering a resistance there. Then again, we are back to this red candle mode, and we see where this price is not making a lower low. And you see one more line. Let's not mark this line because already there's one line very close to this. So you keep on moving down and see where the price is not able to make a lower low. Principle is only this: you need a higher high for uptrend or a lower low for a downtrend, and you have marked pretty much most of the lines. I'm deliberately not being so careful to mark all the lines. Now you switch back to your 15-minute regular candle, and you will find that you've got very good support and resistance levels. If I wanted to dig deep and look for a line somewhere corresponding to this high, I could have done it, but I've just stopped short. Maybe you can do it as your experiments in charting. Right? Somewhere you would have found a line, definitely. So when I'm in a trade, I look for the price to reach some level of resistance so that I can exit my trade. If I'm not able to do this marking of support and resistance, supposing it goes to a region where it has not been there before, then I quickly add the pivot points to my chart and say I will exit at pivot point. Still not bad, no? I had an entry at 161 and maybe I would have got out here at 236. So even then, it's a pretty good return, no matter which way you look at it. Compared to any other financial instrument, this would be a fantastic return. Now, this is the entire system. There is no need to explain anything more than this, and this is what most of our people are following. And I personally trade only this, and I don't look at anything else. Now I've stopped looking at all indicators, open interest, option chain, all the things I've stopped. And I don't look at world markets to see how Dow 30 is doing and how Nasdaq is doing. Nor do I look at SGX Nifty and keep biting my nails in anticipation of the market opening. All those things are now a thing of the past. I'm simply not interested. What I'm interested in is what the price is doing. As long as the price is moving from a support level to a resistance level, I'm okay with it. I'll trade that move. What the Heikenashi candle does is it tells me where the price is bouncing near support. When I'm a price action trader, let me just draw some lines here. Right. So the moment I say there is a resistance here and the price is rejected, I don't just jump into a trade immediately. I wait for a confirmation candle. And generally, the confirmation is that the low of this candle, rejection candle, is broken. That is taken as a confirmation. In our case, Heikenashi will tell us that there is a confirmed trade. Go ahead and take that. Now, let us look at some other tradable instruments which we can go through on Zerodha itself. I'll say crude oil is our usual example. So let me put that chart. Okay. I'll switch over to the Heikenashi mode and you can see for yourself where you would have taken a buy entry above the high of a red candle according to our rules. And this is always on the normal candle, not on the Heikenashi candle. Heikenashi candle is just a visual tool which tells us where to buy. So where do I take a sell trade? I'm supposed to wait for the low of a candle to be broken, which is here, this candle, the small doji candle. Once this low is broken, I know that my resistance is broken and price is going to come down. And it did go all the way down to the support, from where it again pulled back and went upward to again hit the resistance. Now this is for commodities. Silver M. Can you see how this exact same method can be useful for all your trades? Buy above red candle high, sell below red candle, green candle low. These are the only two rules you have. Now let's look at currency. Here you had a fantastic sell trade, which went all the way down. Then you had a buy trade, which didn't perform very well, unless you had taken some quick profits, and so on and so forth. Actually, there's nothing much more I need to do in terms of explaining these things. But this is how your entire system will work. All right. And it works on Bitcoin, US dollar also. I keep doing this as a practice trade for my paper trading account. You look at your Heikenashi red candle, place the order above this on the normal chart, of course. So you buy above this green candle high and wait until your target is reached. So it kind of works on all the instruments which you can have. And I don't trade Bitcoin or anything. I don't trade even commodities or currencies. I like my Banknifty for the simple reason that I like to get my 100% return and close my computer. Now let us move on to the stock options trading. In a Banknifty trading, you always had this issue of whether I should buy or sell, or whether I should buy call option or a put option. And to get around that, we said if the price action is predominantly trading above the opening price, then you look for a call option. And even sometimes with this rule also, you may have a situation where the price opens and then comes down, you get into a put option, and after that price goes up, you're confused. All this confusion doesn't arise in a stock option trading because we are using the top gainers and top losers to identify our stock picks. Now, if Nifty is trading in red, let's say at around 9:45 a.m., right? You look at top losers. All right. You pick any of these stocks, put it in your watch list, and then you look at the strike price which you trade and go ahead and trade this stock. If Nifty is green, look at the top gainers. One of your biggest problems, whether to buy a CE or PE, is already solved. If it's a top gainer stock, you're only going to buy a CE. If it's a top loser stock, you're only going to buy a PE. Let me go to FNO Securities and look at losers. You have JSW Steel, etc. Let me take something from the bottom, because at 9:45 you don't know which of these stocks might have been in the top and then slip to the bottom, or whatever. Generally, what I find is that if you take the stocks from the sectoral indices of Nifty, you're pretty much safe in trading any of those stocks. And you will just see at 9:45 which is the stock which is doing worst scenario, which is financial services. Wait a second for this to load. So this is your financial services index. You take any of the stocks here and just put them in your watch list. Let's take State Bank for convenience. Lesser things to type. All right. And let's look at a State Bank chart. Around 9:45, the price of State Bank was
Correct.
somewhere around 359.35.
Very. Yes. Let's say.
We saw that State Bank is. How did it come into gainers? Sorry about this.
Actually, it's all private banks loses today, and the PSU bank has gained something.
No, I saw minus 1.29 here and went into financial services index, because that has fallen the most, right? State Bank surprisingly has been going up. Okay, let's assume that it's a top gainer here. I don't have patience to look at why it is showing this way. Okay, assuming this is a top gainer stock, and you have at 9:45 a certain price, 359.35. Typically, a top gainer or a top loser stock moves around 3 to 5%. So what I do is I look for a 3% away OTM option. The reason for OTM is that option prices are cheap. I don't like investing too much money into any trade. So I will say that into 1.03 will give me the upper level of the strike price, 370. So if I say SBIN 370C, this will be my strike price which I select. And you will see that the price started with 9.7, went to a low of 9, and then started climbing up. So assuming that we look at the Heikenashi chart, you will find that the price actually fell first and then went up. So you have exact nice opportunity to buy. So your buy opportunity comes around the third candle. So you look at your normal candle and buy above the high of this third candle, which is 10.3, with a stop loss of 9.7. Now, unlike a bank nifty or nifty option, which are much more liquid, stock options are generally a little bit illiquid, and you may have to place a limit order instead of a stop loss market order to get your price. But around 10.3, 10.5 is a good price to enter State Bank. and you would have a very smooth upright all the way to the top. Let's say around 13 rupees. So from the lot size perspective, it is 1500 is the lot size. I bought at maybe 10.5. So my capital investment is 15,750 for this stock option, one lot. Now, assuming I sell at 13 rupees, I have 2 rupees 50 paisa as my profit. So 1,500 multiplied by 2.5 is 3,750 rupees profit on an investment of 13,000 rupees. There could be some stocks which give you phenomenal returns. I've had stocks which give more than 100%. Sometimes they give 70, 80, 60% also. So it all depends on how your stock is performing on that particular day. Let's see what Titan did today. So Titan fell, went up, and then again came down. Now, if you were looking at Titan on a top losers list, you would have waited for an opportunity to sell Titan. Right. So let's look at what the Heikenashi candle does. Rule is never sell against a red candle. So all these candles are just a waiting game. And then you get an entry to buy actually above the high of one of these candles. And then price went up, and again it gave you an opportunity to sell at the low of this candle. This candle, right? This is how your Titan price behavior was. I'm not really very happy at this kind of price behavior. So let me look at some of the stock. JSW Steel, Kotak Bank. Same kind of a pattern. Went down, moved up, and then fell. Let's see. Kotak also would have behaved the same way because Banknifty also behaved the same way, right? Oh no, great. This is fantastic. The only thing is in Kotak, you did not get a chance to enter a sell trade until this candle, this green candle low was violated, right? You would not have captured a bigger move unless you had taken a risk and taken the entry right at the beginning. But I would suggest strongly that if you're just started doing stock options, don't take that kind of risk. But it's possible that you could enter a trade right at the open and still make it work. Okay. There are ways to do that. Do I say that this is the best way to take the trade? I don't know because this is the way I prefer to take it. My stop loss is lowest around this candle. Let me just look at the candle again. This is a 12 o'clock candle. 12 o'clock candle stop loss is the lowest. It's this red candle. Once the low is broken, 1774, with 1776 as the stop loss, you could have traded this. Of course, there would have been a stop loss hit. Then you would have got a re-entry. That's fine. Now, if I look at the 945 candle of Kotak, which is 1777. So 1777 to 0.97, 1723. Let me look at 1700 P. As I told you, I like to go out of the money because lot size is only 400 and 20 rupees is the max price. It has gone. So your opportunity to buy this option, this is a PE which you're buying, would have come only around this time, 12:30. At 12:30, this is a candle whose high got broken. 17.4, you would have got entry. Not much of a profit today, but most of the times, if you're able to catch some big move, you'll end up with a fairly decent profit. All for doing nothing actually. You don't need any analysis. You don't need to tinker around on the strike prices and all those things. Now the final topic which we'll discuss is how do I select my strike prices? How do I know what strike price to select for a stock option? As I told you, I look for a 3% move up or downside. So both for C and P, I just add or deduct 3% from the price at 945 and take that as my strike price. The reason I do that is in case there's a good momentum move and the price goes to your OTM strike price becomes in the money or even at the money, you have a fairly good growth in your premium. So you would make a guaranteed profit on most of these cases. Profit could be 30%, 40%, sometimes 60, 70% also, sometimes even 100%. Depends purely on the momentum behind the move. There are some times when you see that some stocks drive up the index very fast. In those cases, you will have a phenomenal profit on the stock option side. Now, on the Banknifty option, I have a different set of rules. Banknifty, I don't like buying options priced at 400, 500 rupees, and definitely not anything more than 200 rupees. So, given that scenario, I need to go to the out of the money options and buy those things in the hope of making my profit. Now, for tomorrow's trade, since both these strike prices are below 200, I've kept them in my watch list. Any of these things which give me entry tomorrow, I will take that trade. To do that, I just need to look at my chart and wait for the red Heikenashi candles to form. This is just a recap. The moment I see red Heikenashi candle forming, I know that sooner or later I'm going to get entry into this trades. So whichever side is giving me the entry first, I take that, provided it is at a reasonably well-formed support level previously, which we have marked earlier. In case it has gone beyond the support, I don't worry about it. I just add on pivot levels to show me where else there could be a support or resistance. In this case, if you see this light here, this pivot level has acted as an exact support from where the price bounced. So I know that my trade entry would be valid if I take it around this area. Any of these candles which shows a bounce, I would be happy to take the trade. And it just happened that exactly after a bounce, a rejection from the support, you had a next candle which was a green candle, taking the price higher. So this is the trading plan for, let's say, tomorrow. I would wait for a red candle to form, then switch over to the normal candle and keep placing orders against each and every red candle so that I can get entry into the trade as soon as the high is breached. Okay. So in this case also, since I'm an option buyer, I'll keep placing my order for entry above the high of each of these candles. And the moment some high is broken, if it is at a support level, I'll take the trade. Here I would have taken this trade here. This candle broke the high of the previous candle, but unfortunately it did hit my stop loss. And then again the price started coming downward and I got one more opportunity to enter here. Now, while I'm in a trade on the call option side, I preferably don't look at this side, no matter what the price does. I just keep seeing what is happening on this. And once I'm into this trade, on the third candle I've entered, as long as my stop loss is not hit or my target is not hit, I'm not going to look at the opposite side trade. This will help me to prevent, some kind of a small pullback and then again retracement back to the normal thing. So this is something which I'm afraid you will have to learn by experience. You may have a couple of stop loss hits even on a trending day, but since the stop loss is small, you don't need to really worry too much. The final tip I have is that normally when I enter at a support level, my stop loss is so low. I like to calculate from the high price about that. My entry price is the high price, no, 214.45. I say 215, let's say, rounded off. And I prefer to keep my stop loss not more than 20% away from the entry price. If it is greater than 20% of the entry price, I prefer not to take that trade. It prevents me from taking a trade like this, let's say, from 240 with a stop loss of 197. This is a trade I would rather not take. I don't mind missing the trade. So that's it, folks. All our explanation regarding this method, how I follow the method, etc., is all complete. Now, can we have questions? I'll be glad to answer them for you.
Sir, may I ask you a question, sir?
Yeah, lots of questions, please.
Yeah, one. What is the use of spot price except seeing the opening high and low? Otherwise, we can use just this chart only.
Yeah, you can use the option chart. See, your tradable instrument is the option chart actually. Since your option is a derivative contract, it is derived from the trend of the underlying spot chart. Wait, let me push this back to Banknifty. And when I see a trend change happening on the Banknifty chart, right, I know that my uptrend is over. I can take profit on that and look for a sell side entry. Okay. Predominantly, the spot chart acts as a trend indicator, and the tradable instrument is nothing but your CE and a PE chart. You will get your opportunity on one side and you will trade that.
Right. And so second question is whether you trade only in the same weekly option or you also trade in the next.
I don't trade monthly options and all those things. And sometimes I do trade the next week's option. But you see, it's about whether you decide to carry over your trade or not. I hate carrying over my option trade because theta could impact me. Premium decay and all those things I don't want to deal with. In an intraday trade, there is no theta decay. There is no time decay in the option. There could be a decay in the price because the price is not moving. It's moving sideways, consolidating, like on this day, let's say. Here, my premium would have decayed with nothing much to show for it. But in terms of time passed from here to here, there is no decay on time. Time decay is always with respect to the number of days to expiry, not number of minutes or hours or whatever. Okay, otherwise there will be unending option analysis tools which will be required.
Right, sir. Okay, sir. Thank you.
Thank you.
Hello.
Yeah.
Sir, can you please explain like entry of Heikenashi candle, sir? Like I was late of this one, sir. Please.
Okay.
Sorry, sir. Sorry.
No problem. Absolutely no problem. You need to be clear on this.
And entry and the strike price, sir. You told that 3% is the which you selecting.
3% is for
the spot or
stock option. No,
okay.
3% criteria is for my stock options.
Okay. Okay.
Right. For my Banknifty option, I have a specific range of strike prices I select based on my own experience. And how I select it is like on Fridays,
Okay.
I take 1,500 points away from ATM.
ATM.
Yeah.
Okay.
If your current price is 33,100,
Okay.
that plus 1,500 and minus 1,500 will be my strike price for Friday.
Okay.
Why
1,500 is-
so far away? Because
Yeah.
on Friday the option prices are abnormally large after
Okay.
the expiry.
Okay.
There's no price discovery which has happened. Demand and supply is yet to kind of get frozen, and
Okay.
the prices generally start higher, and then gradually as they move closer to the expiry, the prices keep falling.
Okay.
Right. That is why in
That
option
is not
buying,
safe, no, sir. That is not safe actually.
what is not safe?
Buying in 1,500 out of the money or like that, like that.
On the contrary, I find it extremely safe
Okay.
because even if you lose,
Okay.
you have lesser amount to lose.
Yeah, that is true. Yeah.
Right. In an option buying scenario,
Yeah.
if you buy out of the money options, and I'll show you one out of the money option also,
Yeah,
just for the heck
Please.
of it.
Please.
Shall I say 31,000 P? No, 31,000 P was not a great example. Where is it? Let me take
32,000.
31,800. No, we are trying to explore the out of the money options now.
Yeah. Yeah. Okay.
So I'm just trying to see which would be a good example to show. Actually, the
I
VIX has
think
come
today's
down
32,000
tremendously.
put. I
See,
think
what has
today's
happened is
32,000 put.
32,000 put. We'll try that.
Today only. He moves very well.
It actually didn't, no, but look at it from here, 22 rupees went up to a high of 43 rupees. Almost 100% you got. I've not yet come to the part where you set your targets and exit your trade. One way of exiting the trade is mark your support and resistance levels and exit as per that. There are other ways I'll explain to you. But this is also not a right example. I think today, because the VIX has fallen so much
Okay.
to under 20, all the option prices have got squeezed down.
Yeah. Excuse me. Yeah. Correct. Sir.
But
So
typically on a
this you
Friday,
do it on only on Thursday, no? On the expiry day you do it. Friday. Okay.
Yeah. Friday is 1,500 points away.
Okay.
OTM put and call.
Okay. Okay.
Then Monday, I
Okay.
bring it down to like 1,000 points.
So Friday you 1,500, Monday bring to 1,000.
Then Tuesday around 800.
Okay.
Wednesday 500.
Okay.
Thursday morning session around 300.
Okay.
And afternoon session, if you want to trade the afternoon session, go for a ATM straddle.
ATM.
Yeah.
Okay.
You will buy call and put and let the trade run till the end of the day. This is called a straddle, no?
Yeah. Yes, sir. Yes, sir. I know.
Right. So the reason I do it is typically if you look at the ATR of Banknifty, let me show that.
Yes, sir. ATR, average to true range, na?
Correct. Average true range, if you see of Banknifty,
Okay.
you will know typically how much range Banknifty moves.
Okay.
Daily chart may I have to see.
Yeah, correct, sir.
See, it has fallen from almost 950 level to it has come to 800 something.
Correct. Yeah.
The trading range has been continuously getting compressed.
Correct.
Right. So even on a very bad day, let's say yesterday was a very bad day.
Correct, sir.
Right. It moved up only 300 points, 270 points.
Okay.
So when I say that on Thursday morning, I would trade a 300 point OTM option.
Okay.
Even if it goes to ATM, I'm in the money because my option price will start going higher.
Correct. Correct.
Once it becomes ITM, suppose on that day you have instead of 300 points or 300 points movement, you have 800 points movement.
Okay.
Then your profit is going to hit the roof.
Yeah, correct.
Simply because your delta has now gone from from 0.30 to 0.7, 0.8, etc.
Yeah, correct.
So you're going to have a very exponential growth in your profit.
Correct, sir.
At the same time, supposing the market remains sideways,
Okay.
by going 300 points OTM, I'm
Okay.
trying to minimize my risk.
Okay.
In option buying, we can only lose to the extent of the premium we have paid.
Exactly, correct, sir.
So that is the absolute worst thing that can happen to me.
Okay, true.
So this is the reason why I keep this graded intervals. As I get closer to expiry, I bring my strike price also closer.
Okay.
If I'm far enough from expiry, then
Okay.
my strike price will be deep OTM.
But
Just on Friday and Monday.
But in Zerodha, sir, it won't leave, no, sir. Actually, I
It
have
won't
seen.
give you. That is
Yeah.
why I moved out of Zerodha. I trade with a broker called Asta Trade.
Asta trade. Okay.
Yeah. Asta Trade I prefer because of two reasons. One is deep OTM prices.
Okay.
Second is they give me 3 times margin on option buying.
Okay. Okay.
Which means even if I have only 2,000 rupees in my account,
Okay.
I can still trade one side of the option and make money. Supposing I get a signal for a call option side.
Okay.
If CE gives me a buy signal,
Okay.
I can still take a decent strike and make money with that particular strike.
Okay.
So my 2,000 rupees capital will be actually 6,000 I'm trading with. Yes, it is risky to trade with margin.
Yeah, correct, sir. Yeah.
But it doesn't matter because that is the worst thing that can happen. No, 2,000 rupees will go for a 6.
Correct.
So I'm prepared for that kind of a risk.
Yeah, risk is the main. Yeah, correct, sir. And can you please show the entry, sir? Like Heikenashi candle and this entry, sir.
Yeah. You see, basically what you do is when you look at your Heikenashi candles,
Okay.
and you see this is a 15-minute chart of today.
Yeah,
right?
correct.
So you see the candles are forming red candles. This
Correct.
big red candle happened because of a gap down open.
Gap down. Yeah, correct, sir.
Then subsequent candles could not cross the average price of the previous candle. So it continued to remain red.
Correct.
Now, whenever I see these red candles forming, I'm very happy.
Okay.
Because my mind says your buying opportunity is nearby.
Means the candle should go big. It's going on lower, like it's becoming.
It will keep going lower, and
Okay.
you'll see here what happened was the big red candle was this one.
Yeah.
Then the next one was also a very
A red candle.
indecisive red candle.
Correct.
Then some buying momentum started coming here in the third candle.
Okay.
After which you got an entry into the trade.
Okay.
Now, what are the criteria? Stop loss is only 20 points away, 22
Correct.
points to be exact.
Correct.
Around 10% of my entry price.
Entry. Yeah.
Criteria 1 fulfilled.
Okay.
Criteria 2, this high of this candle is broken, and only after that I get into the trade.
Okay.
So 215, let's say, is my entry point.
Okay.
With 192.85 as my stop loss.
Stop loss. Okay.
It's a decent enough risk for me to bear, no? Even if the trade goes wrong,
Yeah.
heaven and earth will not fall.
Okay.
It will be a small pinch in my wallet. But after
Okay.
that, I know that there is going to be a trade which will be giving me much bigger profits.
Okay. You're executing the executing the trades after looking Heikenashi candles, no?
The moment I see Heikenashi is forming red, immediately I switch over to the normal chart.
Okay. Okay.
And I see which candle is breaking my previous candle's high.
Okay. Okay.
In this case, only the third candle high was
Third
broken.
candle. Yeah. Correct. Yeah.
Right. After that, I'm into the trade. I'm officially
Yeah.
in a trade now.
Okay. Okay.
With a stop loss of 22 points.
Fine. Fine.
Right.
Okay.
Risk is low. I've got into a. Why do I take this trade after this high is broken? Is that from a downward momentum, buyers have started coming in.
Correct.
Now, it gives me a relatively safer trade in the sense that since buyers have come in, we can expect them to push the price higher.
Yeah.
Which they did in the next candle, but
Yeah.
it fell
True.
back.
Yeah. Correct. Yeah.
But still, it did not hit my stop loss. So I'm
Correct.
still in the trade. Next candle, red candle, again, I'm not worried until it doesn't hit my stop loss. This candle also did not hit my stop loss, and after that, it started taking off. The critical thing here is something which I have not been able to master. None of us are able to master and do. is the correct exit point. If I could exit at the high of this candle, it will be ideal. But it's not possible, we all know, because it
Yeah.
finds a fleeting moment there and rushes back down. Right?
Correct.
Even as you're looking at this candle being formed, it goes all the way and then suddenly it starts falling deeply.
Yeah, correct. Within seconds, it does
So
actually.
you just can't get off at the top. Forget it.
Correct.
So what you need to do is you need to find out if you can mark some levels of support or resistance which
Okay.
coincides with these points.
Okay.
And the moment you see that one level has crossed and the other level candle is going strong,
Okay.
quickly put your exit order at the next level and try to exit.
Sir, if I may interrupt, the fifth candle in Heikenashi that has violated the previous candle's high, sir. But in this normal candle, it is third candle.
Yeah, that could happen. See, Heikenashi is just a tool which tells you that buying opportunity is near. It doesn't mean you have to wait until the last red candle is formed in the Heikenashi.
Okay.
All right.
Okay.
The moment you see a red candle and the high of the normal candle is broken, you are free to enter a trade.
Okay, sir. Thank you.
If you wait for this fifth candle high to be formed, broken, then you will not get entry into the trade because this high was broken only later, much later in this candle. It wouldn't be a right spot to enter a trade, no. Whereas this is closer to my support level, reasonably close to my support level, I should say. In fact, I have not marked any support or resistance levels here, but even visually you can see. Wait. The price has started coming towards the rock bottom only in the last 2 days, 2 or 3 days maybe. Right? And if you take this as your support level, this candle low, from where it has bounced, you almost had a picture perfect entry here. Oh, sorry, this is on a 15-minute candle. I'm very sorry about that. 1 hour candle we had to see. And it broke all the previous levels. So let us look at pivot points and see what pivot points will tell us. Does pivot point tell us there is a support here? No, after that support was broken also, prices started only moving up from here. So you will have to just make a kind of, this frankly would have been a risky trade actually. Unless you had waited for some candle high to be broken. Let's see. There is a level here. Supposing I mark this level, 336. The price was already at 189. So even this level couldn't have been valid. I think it has broken all the levels and then pushed back upward. Honestly, this wouldn't have worked if you had looked at a support level to form and then take the trade. But ideally, I prefer to take a trade at a support level because it gives me a best risk reward ratio. Sometimes it could happen that you're not close to a level. The closest level away from that was here. And then this one was already broken, 210 rupees. Here I would have had a compromise trade only by entering at the third candle. But at 214, there's no level around that place. Okay. It's unfortunate, but that's the way it is. I did not have a clear enough level of support.
Okay, sir. Thank you.
So pardon me, sir. In the first webinar you had taken, you had shown us that you change the time frame to 1 hour, convert it into a line chart. Wherever you see a sharp bend, just draw a line there.
Correct. See, there are two ways of identifying your support and resistance level. both of them use where the price has already gone, okay, in the past, right? Now, in today's trade, unfortunately, price has gone below where it finally reached, and it has gone even below that. There was no means of establishing a support level after the price broke down from an established support level already. Normally, I would have used a Fibonacci line or a pivot line to see if there is some support on which I can rest and take my bounce trade. But unfortunately, in this particular example, you are not able to see a support level at which you could have taken a trade.
Agreed, sir. Today was a very dicey day. I did try. I could not find. I'm being very honest. I was not feeling very confident, and so I left the trade because
I
whenever I
think
feel
that is because
confusing,
of the last 3-4 days experience where
yes,
nothing worked out for us, right? Everybody was kind of feeling frustrated about it, and suddenly that big move on the upside was a godsend to everybody. So people
actually,
started booking their profit at 1:1, 1:2, and all those things.
sir, actually, the Bank Nifty has turned out to be more of a scalping instrument in last 1 week because
It
of its just
happens, no, sir.
topsy-turvy.
See,
Usually, sir, every third or the fourth day, Bank Nifty has an history of trending in one direction in a big way, either up or down. It usually does once in a week. But last whole trading cycle, it didn't move
correct. The
even.
entire trading cycle it didn't give us the right opportunities to take a bonanza trade.
Yes, sir.
I
Like, see,
personally, I was personally losing on the last 4 or 5 days. No,
so the first day I practiced on your strategy was, and I shared it with you. With three lots of Bank Nifty, had I been little patient, I would have got huge amount of money. But it was I had to cut 20. My position was 20% less. But subsequently, even though in confusion, I did make money using the scalping technique. After that, I had two red days, and then I shifted myself to a paper trade system. And I was watching it. The topsy-turvy movement of Bank Nifty was too much for a normal person to handle.
the
So
topsy-turvy
that's
movement is not the problem. Honestly, the problem is a small range candle which is being formed.
yes, sir.
Topsy-turvy is fantastic actually. You make money on both sides. Like for instance, today, if you see the Nifty C, Bank Nifty C and P chart, you would have made money on both sides, no? You had an up move on which you made 100%. You had a down move which is P on which you made another 100%. Today was an excellent trading day actually.
Actually, it was. I was feeling little nervous on it.
That is
And,
because of the last 2-3 days where the Bank Nifty has been disappointing us. Because if you
actually,
see,
my straddles were giving me more money by selling that, but not. I tried, but my paper trade was not doing very well, and so I declined to take a position today, and I was avoiding taking position into Bank Nifty.
sir, if you
So
do this now, you are bound to miss a big move which can give you jackpot returns.
yeah, I agree. The return on one day wiped out 50% of my lifetime losses of Bank Nifty. I'm being very
Correct.
honest.
Yes.
One
Hello.
trade, just wiped it out.
Mm.
Yeah, please go ahead, sir.
Hello. Kamal sir. Hello.
Yes, sir. Yes, sir.
Sir, last Kamal sir and Swami sir.
Hanji.
Last 3 days I was hit by all the stop losses, sir.
Correct.
Today the whole 3 days losses has been recovered and I am in a profit today. I
Yes.
played both the way in C and P. The mistake I have done, I booked a profit very early. If I booked it, if I hold it, I will be in a more profit today. But the 3 days losses has been recovered in one day.
You see,
Sir,
typically, no.
you are talking of 3 days losses. I'm talking of 3 months loss of nearly a huge amount. And
Okay,
I
sir.
recovered 50% in 3 days' time.
Wow,
So
sir.
it's not, it's, I see, I had lost 40 to 50,000 in a single day in Bank Nifty. So that compounded on my other losses, it was, I think, so reasonable figure. So that all recovered in 3 days was reasonable number for me. So I want to master it very nicely. I'm being
So
very
the
honest.
only way to master it is Number one, either you put money on only one lot and trade. Don't worry about increasing the number of lots. That can always come later. Trade with only one lot for the next 1 or 1.5 months. Take each and every trade which happens. It's okay if it hits stop loss. And it is bound to hit stop losses many times. Whenever the market is sideways, you cannot expect that you will get a big return and get away with it. Nor can you resort to scalping, because your scalping habit will prevent you from staying on for the big winners. I definitely will not recommend a scalping habit. What you could do instead is, first is you have a very small stop loss as it is. When the price moves up in your favor, right, first opportunity to move your stop loss to the entry price, please do it. Then as it goes to 1:2, 1:3 risk reward, move the stop loss to, let's say, 1:1. That way you protect a portion of your profits. You're not worried about a pullback or a reversal. You know that this is the worst thing that can happen to you, right? You will get out with a small profit, you will get out with a small loss, or you will get out with a break even. These are the three possibilities in these cases. Supposing that,
Sir, sorry for interrupting you. Actually, I did the same way the day we did that trade. The first day trade was, I trailed my stop loss within matter of minutes to my cost price.
mm,
And then 1:1, 1:2, 1:3. And
mm,
as it went up. So I kept on doing it. But
correct.
at one point of time, when it was 1:8 or even more than that, my impatience came into the play and I booked it at full price itself. I brought it just 10 rupees behind below the that time current market price. And it
Mm.
was matter of minutes that all the three trades got squared off. But this is a very good way of remaining in the trade, that you go by percentage and keep on increasing it. Even if it comes to your and hits your stop loss, you only, even if it's hits at your entry price, then also we only just pay the brokerage and we take the loss and go home.
In fact, what I do is I just fix my stop loss, enter the trade, and leave it till the end of the day. I don't care how far it goes, whether it comes back, hits the bottom, and hits my stop loss. Outcome is known, no? I'll have a loss of some 500 rupees on a trade. Okay, it is acceptable.
Target, sir?
Whereas, hello,
Target, sir?
wait, I don't keep a target, is what I'm trying to tell you guys. What I do is I stay on in the trade till the end of the day. At whatever time my broker auto squares off my position, I let the position go. Now it could happen that Bank Nifty moves in a single direction continuously with great deal of momentum. Rare, but it happens. Okay, there you get a big bonanza gain. Then, like what happened today, Bank Nifty went up and then came back again, and it gave you an opportunity in PE. No, today. In that case, only my stop loss will get hit. I only wasted one day. That's all. I have not wasted my money. So typically, what I do is after I enter my trade, I don't even look at the charts. There is no need for me to keep looking at every 15-minute candle and wondering whether it's a reversal. Should I take a reversal trade? Should I move my stop loss higher, lower? All that nonsense I'm not willing to do. I place my trade, walk away. I do look at the MTM just for my ego satisfaction. But I know at the end of the day, even if I lose, I'm only going to lose to the extent of the stop loss, which is already known, decided, and accepted. There is no need for any mental gymnastics here.
Uh, Sir, pardon my ignorance and the love for the indicators. Do you like to use any kind of a moving average along with it to make an early exit? Please pardon me, I've never done it. So
Sir,
I'm just asking.
if you take help of a moving average or a super trend or anything, you're not going to get an early exit. You're just going to barely scrape away after the price has turned. Indicator indicates after the price has moved. That's why it's called an indicator, no?
Right, sir. Noted, sir.
So, see, it can be painful that what was a good profit has suddenly vanished and evaporated into nothingness. It can be terribly hurting, I know, but I prefer to take that hurt because it helps me to stay for the long haul on a unidirectional movement day where I make more than 10, 15 times my capital. I would rather take a few small losses and be happy with it. Yes, your account will slowly bleed. Okay, you will bleed to the extent of maybe 500,000 rupees a day. That's fine. But when you get back everything plus more in abundance.
Sir, actually, this is the motive of all the trades. The mantra is that you lose small and you gain big.
Correct.
Even if you are,
let your winners run, they say no. There
yeah,
is a meaning.
yeah.
But
Uh,
it
I-
could happen that winner becomes a loser, which also
sir,
is very bad. And from a price action trader's point of view, you're not supposed to let your winners get converted into losers.
yes, sir. Yes, sir. Noted, sir.
But I am fine with that because I know I can only lose to the extent of my stop loss. Not
Can you
Actually,
show the,
I'm not going to lose a penny more than that.
hello, hello,
Yeah.
sir, I'm having one question. Can you show this system in the equity stock, please?
Yeah, sure. Why not?
Please, sir.
You want equity stock day trading or
Day trading, sir.
let's
sir,
take.
Ultra Tech was an awesome trade today, sir. Show
Sir,
them on Ultra Tech.
we'll take any trade which was not awesome, but
Yeah,
still it would have given you a.
Sir, Reliance.
Yeah, that's what I'm doing. Now, Reliance, if you see, starting candle was a green candle, no action from outside. Then you had a small PE entry or a sell entry, and after that, a fairly sizable impulse wave on Reliance on the buy side. So each time you look at your Heikenashi red candle and say, this is the place where I'm going to buy, it started forming red candle, and this high was broken. After that, you got a fairly decent trade, no? 1924 to whatever, 1938. Not a good enough trade, but given the circumstances today, this was a decent return.
Sir, in this context, I will be like to be telling to the audiences that if you stick to only 4 or 5 stocks, they may not trend for 1 or 2 days or maybe 3 or 4 days in a go. But the 5th or the 6th day, they will trend in such a way that they will give you such a huge profit that you can't even imagine.
Exactly, you're right.
Sir, after your first class, you will be a little shocked to know, sir, I only trade in Ultratech, Maruti. They are my favorite stocks because they are 6,500 rupees.
Yes.
They give me a movement of 100, 200 rupees in either direction I like to trade in.
Bajaj FinServ, sir, moves around 300, 400 points a day.
Yes, that is what it's. I think so. It's beyond my capacity these days. I keep a very small stop loss. A few of the people know that I have been trading, just telling them my entries. And my stop loss in Ultratech and Maruti are never more than 7 or 8 rupees. Maybe sometimes even 5 rupees I keep as a stop loss. If it hits, I buy 100 odd shares. I think that I have lost my 500 rupees. Whatever I gain is my profit, sir. This is what I did. And the first 2 candles, if they form in my direction, I trail the stop loss 1 rupee above my entry price so that my brokerage is also taken care of.
True.
And then I leave the trade till end. Then I trade it according to, there is some way I normally do it. I read the candlesticks very nicely. Then I read according to that and then I exit the trade. That is how I've been doing. And this is a kind of a sea change which has come into my mind over the last 2 or 3 months, that I have only not doing in 4 or 5 stocks. And I only look at them only. And this is what I want everybody to look at. You even pick up PFC, ITC, anything, but look at them only. Then you will remember these stocks by heart, how they're going to behave. I do agree. Swami sir does not like trading in stocks. He finds stocks as one of the most boring instruments, and one of the non-profitable things.
Correct. Absolutely.
Being very honest, I admit to this. Before Sir could say it, I'm saying it myself.
Hello, sir. Can I ask a question, sir?
Yeah, please, sir.
Sir, can you please once again, just for my, I have understood the strategy, sir. Just wanted to know when we have a red candle being formed and then we have a green candle breaking the high of previous red candle. That is the entry, sir.
You don't have to have a green candle breaking the high. Even a red candle breaking the high is a valid entry.
Okay, sir. So basically, if
The technique is very simple. Go for the break of a previous candle high.
Okay, sir. And that is the entry for CE entry, sir. And for the PE entry, it is same entry because we are going.
Low of the, PE entry is also, since you're an option buyer,
Yes,
you will look for a red candle high to be broken.
Okay, sir. Got it, sir.
Right? If you're a seller, you would to book, then you will enter as a trade. Like for instance, supposing I'm an option seller and I look at the second candle low being broken. Okay. Now this high is my stop loss. Okay. Let me remove this pivot levels and all those things. I don't need them now. Now I have
Sir,
I have an entry here, stop loss here. I let the trade run. Now worst scenario, trade went back, hit my stop loss. Otherwise, if I had a take profit target, I have taken the target.
Sir, एक question.
Is it okay?
हाँ सर, एक क्वेश्चन था जो मुझे पूछना था. हेलो.
Yeah.
हाँ सर, नीलेश here.
Yeah, Nilesh, tell me.
हाँ सर, ये पूछना था कि जैसे हम लोग पहले मैं ऐसा करता था कि कोई भी रेड कैंडल आए तो वहीं पे हैकेनाशी की कोई भी रेड पे आए तब मैं ये ट्रेड करना की कोशिश कर रहा था. लेकिन सर आज आपने जो बताया, जो मैं पहले से सोच रहा था कि हम अपना सपोर्ट और रेजिस्टेंस पहले मार्क कर दे इसके ऊपर और इसके बाद जब रेड आए और तब ट्रेड ले तो ही थोड़ी अच्छी सी एंट्री होगी ना सर.
Yeah, see, typically what happens is, let me close this floating meeting controls. Okay. Let us say you have determined some support level and resistance level. Obviously, you couldn't have determined something here. Let me just randomly mark a line here and a line here. Okay. Now I'm looking to trade between these lines. If the price goes up to resistance, I would like to sell. If the price comes down to support, I would like to buy. Right? Simple price action rule. Please say yes or no. I would like to have a participation.
Yes, sir. Yes, sir. Yes, sir.
Okay. I somehow screwed up the thing and let me mark another line here, just like that. Okay. If the price comes towards support, and if I see the evidence of a price bouncing from support and the previous high of the high of the previous candle being broken, to me it is a signal that buyers have stepped into the action. So I would confidently take a trade with the low of this candle as a stop loss.
Yes, sir.
Right? Now, as you can see, price did its up and down thing. It came all the way down, but it didn't touch my stop loss. Right? So I'm still in a valid call side trade or a buy side trade. As long as I know that I'm buying at resistance support, I'm pretty much relaxed.
Yes, sir.
Only when you buy at support, you will find that your stop loss is lowest. Because as the candles approach support, the trend weakens. Because here there's a lot of uncertainty. There's a lot of buying orders which are gathered here. Your supply and demand concepts are this only, no?
Yes, sir.
There will be buyers who have placed their pending orders to buy here. As soon as the price comes down, buyers' actions will be triggered. There would have been sellers who found that prices are now being pushed up. So they don't want to lose more. So they get converted into buyers. So these people also add their buy orders.
Mm.
One is the sell stops are all gone.
Mm.
So once the stop losses are triggered, all these fellows will turn into buyers.
Mm.
That will give further momentum to the price. It will start moving up.
Mm.
This is how the price action moves the prices. No,
Yes, sir, yes.
cumulative actions of supply and demand keeps moving the price up and down.
Yes, sir.
There will be some people who have taken profits here, and this price has got pushed up. Then again, price resumes its downward trend. And
Yes,
all these actions are arising out of supply and demand.
yes.
Now, why don't I use supply demand zones? Why don't I use volume profile to know exactly where these things are likely to happen? To be honest, I don't care. I don't want to know.
Okay.
What I want to know that it's happening, and I want to trade according to that. If price is getting pushed down, there's a small pullback, then a resumption of the trend. I'm happy enough knowing this much.
Okay.
I don't want to know anything else. I don't want to know how my car is functioning under the hood.
Mm.
My car has to take me from point A to point B in reasonably good shape. That is all I'm interested in.
Okay. Fine. Thank you, sir.
Let me look at some questions on chat if somebody has not asked them.
Can I get your number, sir?
What number?
Your phone number.
Oh, yeah, sure. You can. All right.
So your number?
I put it on the chat box 90470222314.
It is not on the chat box, sir.
I will put it. I will put it. Don't, sir. Just you can dictate it. I will just put it.
Yeah, 90470
90470
22314.
314.
Hanji.
Right, right, sir.
Anything else? Buy entry. Okay.
For without your permission, I have done one thing is I have created a small group of 30 odd traders who are ready to work on the vanilla method. Out of that, at least I know Nilesh and me are very aggressive in doing this thing. Is Sir has a very big Telegram channel group where we all are also part of it. But at WhatsApp level, we will be trying to fine tune our strategy and then get into the bigger league. The experts and the distinction holders, people give me a lot of complex in that big group, and I feel that I am like a toddler which has come into a gathering of very people of a very high IQ. So
Nothing,
I
sir. There is no IQ required for this, number one.
that is I feel sometimes they are too ahead of us, and we will take some time to master the
In
technique.
fact, I've asked our people not to share charts and entry levels in the group
That
because I
created a
find
lot
that
of.
most of the people are just copying it and taking the trade and then
But
wondering
it
what
was
happened.
very confusing. It was very confusing for at least persons like me. I had an issue, and I did admit to you a few weeks back, couple of weeks back, that I made a wrong entries. And, that is why I have stopped reading the group, and I'm just trying to do what I have learned.
Correct.
This is what was somebody had shared me with the original technique. So I had kept a piece of paper. I read it at least once before I start taking a trade, and that's how I have been able to understand a little bit. Today was a little more clearer day for me.
Sir, actually, what you all need to do probably is either paper trade for a week or 10 days. You mark out each entry, stop loss, exit level, right? sometimes your gut feel will tell you to exit the trade. You listen to your gut feel and exit. Okay, everything is not laid down in stone. It is impossible for any trading coach or trading book or trading trainers to define where you should exit. If that was so easy, everybody would have given you a cut and dried solution. No, enter here, exit here, stop loss is only so much. It cannot happen in the market. Market is random, right? So when market is random, first paper trade for some time. There's no hurry. Market is going to be there. Market is going to be stronger than ever. It will keep on moving up and down. So days when you get big moves, you see how you would have handled. Like this day, a lot of people complained of a stop loss hit because of this spike candle. RBI day, I think it was, went all the way down and then came up. Then it went on to give decent returns. First paper trade, second trade with one lot, and not more than 10,000 rupees capital. This is my money management rule, which I follow. For every 10,000 rupees of capital, I only trade one lot. I don't try to go beyond that, saying I'm confident this is my system and all those crap. Whoever has devised the system, whoever is following it diligently, even he would have losses, he would have stop loss hits, he would have sometimes continuous drawdowns. Everything depends on what the market dictates. Nothing is in our hands. So let us not even try to pretend that we can read the market, candlestick, chart pattern, all those things. We can't. I know it for a fact. I do use some technical indicators just to know where I'm supposed to place my trades. One of the go-to indicators which I like is Bollinger Bands, which keeps me out of a bad trade here. Like once the price has gone beyond the upper Bollinger Band, I know price has to come back to the mean. It's called mean reversion. So there's no point in my trying to take a buy entry above the high of this candle, etc. It won't work. And likewise, when the price falls outside the lower band, price has to get pulled back within the band. These are times when I simply refuse to take the trade. I just look at the market and watch. There are times when you get a fantastic reversal trade, like on this day. People who bought here, the call option would have had a failure. Put option guys would have made money. It's just one indicator I like to use just to know whether I'm overbought or oversold. In fact, most of the time I don't even need these indicators. I count the candles. In a day of 25 candles, you can estimate your RSI or even your stochastics by looking at the past to X number of candles. Like after my start here, I had only 1, 2, 3, 4 green candles up to the stage, which is what almost half of the day is over. Okay, maybe 5 candles. 1, 2, 3, 4, 5, 6. So here the sellers are a little bit overwhelming on the thing, and then the buyers have come in. Now, what typically it means is that you had a situation. One second. You count 3, 5, 8, 10 candles. Okay, out of 10, I have 1, 2, 3, and 4. So it is 60:40 ratio, with sellers dominating. Right? 4 by 10 is 40. RSI is somewhere around 40. Now, if I were to look at the stochastics measures over the last 14 periods or whatever number of days you choose, whether the price is tending towards the top or the bottom of the range of those particular number of candles. So why do you need a stochastics indicator to tell you that? Just by looking at these candles, you can say that during the day up till now, stochastics is at the rock bottom. Right? Can I have a yes or no?
Yes, sir. Understood, sir.
Yes, sir.
Others?
Yes, sir.
See, if
Yes,
stochastics
yes.
is measuring, stochastics is measuring where your current market price is in relation to the last 14 days, 14 periods, high or low. Okay, you mark it anywhere and see, you will know where the price is, and you can visualize your stochastics. Here, you know, it has come to the bottom and then started turning up, which means you're in a decent uptrend. You can take a C trade safely. And here you will find that the price is at the bottom of this thing. So there has to be a bounce. Whether the bounce turns out to be a reversal or a pullback, we don't know. But bounce does happen. Likewise, you measure for RSI. RSI is nothing but number of green candles versus number of red candles, no? Plotted as an oscillator, that's all. So here also I would say RSI is oversold just by looking at the chart. Sometimes it can pull back and then continue downwards. That also is a possibility. But you know that there will be a pullback around this zone. There is no need for any technical indicators. What does your super trend measure? Anyone?
It's ATR and it has a multiplier into it. Actually,
what it actually measures is whether the previous range, some degree of high is broken or not. That is why you get the candle, your buy signal printed on this candle. Whereas I would have taken a trade somewhere here. And you see there, this is typically a kind of a box range which is getting broken. And that's all it means. And there's no great sanctity to even this super trend indicator. You can always keep editing your settings and say that it works beautifully. I personally used a super trend with 5 and 1, which was giving me blockbuster returns. It's possible to trade with this, absolutely no problem. Only trouble is you get into the trade a bit later, and you need to have the patience and the holding capacity to see your profit. So if I'm saying that my previous red candle high should be broken, I mean previous Heikenashi red versus normal candle high should be broken. What I'm essentially saying is that you enter a little bit ahead of your super trend signal and go ahead and continue your trade. You can sit and calculate any of your indices, studies, indicators using this. You can do moving average, convergence, and divergence MACD. It's nothing
Hello,
but a
sir.
difference of 12 and 26 EMA, no? Yeah, tell me.
Sir, we have to see the Heikenashi candle high to be high or low to be broken, sir. That is
Normal candle high to be broken. If you are in a buy trade, if you are looking for a buy trade, normal candle high to be broken when Heikenashi is red.
okay, sir.
If you are looking for a sell trade, let's say crude oil you want to sell,
Okay, sir.
then you will look for a normal candle low to be broken when Heikenashi is green.
Okay, sir. Got it, sir.
Right.
Sir, can you show on this one on the chart, crude this one? What are your just
Which one? Crude?
Crude.
Yeah, sure.
Sir, do we have to wait Heikenashi to be closed in red or green?
It doesn't matter.
Heikenashi also.
Heikenashi also. See, Heikenashi is already in red. That is why you decided you will look for a buy entry, right?
Right.
Now, when it is at the end of its downtrend, and let us assume this is a pullback,
yeah,
you have to know that the pullback is over before you enter a trade.
Right.
When do you know the pullback is over? When the previous candle high is broken, no?
Correct.
So that is what I'm doing. I'm only using the Heikenashi to tell me which is the most appropriate point to enter the trade.
So least you have to wait till 9:30.
You have to wait until you see a red Heikenashi candle forming. It could happen that you have continuous green Heikenashi candles, and then later only red comes. If I'm only a buyer, let's say in crude, let me delete the lines. Right. If I have to look for a buy signal in crude, I'll have to wait until all these green candles are over, red candle forms. Until the high is broken, I will not enter the trade.
Right, sir. Got it. Thank you.
Sir, what does the wick in Heikenashi?
It doesn't mean anything. People say that wicks signify indecision and all those things, possible change of trend and all.
Yeah,
The only way a trend change can happen is when a downward momentum is broken and buyers establish dominance.
Okay, because as I understand, Heikenashi is only an average of.
Correct. Heikenashi is an average price candle, which uses average only to smoothen the impact of the prices.
So ideally, it should not have any wick.
Ideally, it should not have any wick in a very strong trend. Like in a strong trend, you will find there's no lower wick on the green candle or upper wick on the red candle.
Okay.
The moment the wicks start forming, you know that the trend is slowing down.
The wick in the red, the ones in the bottom, what do they indicate? Is it the red ones have a very long wick in the downside? So what does that indicate? The trend is reversing.
Actually, the Heikenashi candles, high, low, open, and close are calculated using a different set of formulae. Okay. Now, if you see each and every opening of the Heikenashi candle starts at the middle of the previous candle,
right.
Heikenashi, right?
Right.
So the formula is what? Previous Heikenashi candle, high plus low divided by 2 has to be the Heikenashi open.
Hello.
Yeah.
Hello, sir.
1 second.
I just wanted to add
1 second. 1 second, please.
Okay, sir. Okay.
Now, the Heikenashi close price is not determined by a Heikenashi candle. It is determined by the open, high, low, close of the normal candle divided by 4.
All the 4 points, yeah.
Which also is incidentally is an average, right?
Right.
Then your high of the candle is determined by actual high, then Heikenashi open and close.
Okay.
Whichever is the highest of that.
What this doji indicates, after a red candle, the doji is formed, then a series of green candles.
Yeah,
how will be the entry? How will be the entry in this?
My entry is actually before the doji formed on this red candle. Can you see this place where my cursor is?
How can I explain, sir? Please explain it. How?
You
see that normal candle also, sir, by entering.
I have to see. I only see the normal candle for entry. Okay. Now my focus is on this candle. Okay. If I look at the normal candle at that time, it is this red candle.
Yeah, right, sir.
The moment this high is broken,
okay,
my entry into the long side is triggered.
Okay. It is for call side, no, sir? Like again, it's same is like for P also. If the low is broken.
If the low is broken, you look for a P.
P entry.
Correct.
On a normal candle, by seeing the Heikenashi should be green.
No,
for P.
No. See, if you're looking at a spot chart of Banknifty, let's assume this is a spot chart of Banknifty.
Okay.
Here, a break below this low of the green candle will indicate that trend is turned downward.
Yeah.
Right? When Heikenashi is green.
Green, yeah.
So when this low is broken, my trend is changed is what I will come to the conclusion.
Okay.
Now I will go to my option chart and look for a high of red to break.
Okay.
Right?
Yeah.
Because I am an option buyer, I am not interested in selling any option.
Correct. True.
I will always buy above the red candle high.
Correct.
And when the Heikenashi is red, I will look at the normal candle high and then take the trade.
Okay.
Which in this case is above this red candle.
Above that red candle.
The moment I place my SLM order here, my
Okay.
order will get automatically triggered.
Okay, 143 is your buying price, na, sir? Right
Correct.
now.
143 is my buying price. Okay.
And the SL is around 130, I think.
117.85.
Oh, okay. Sorry, 170.5. Okay.
For this particular PE trade,
Okay.
my SL is higher.
Okay.
Now, is it first criteria is I look at my entry price vis-a-vis the SL and see whether it is more than 20% of the entry price.
Okay.
If SL is 28
Hello.
rupees, I will not take the trade.
Okay.
Hello.
But sir, you told that like you will see out of the money it's and all, no, sir. Sir,
Here I'm just showing you for example to
correct,
show you
correct.
how the
No,
entry will
correct.
happen.
True, sir. But people says like that, like if you go far out of the money, you can't get the premiums and all. Like what like in the money the premiums you can collect. Is it true, sir?
See, you take an in the money option. Let's say you bought something at 350 rupees, it goes to 600 rupees.
Correct. Yeah.
Okay.
Yeah.
What is the percentage profit you get?
Almost
250
double,
by
sir.
350, no?
Yeah.
Your
Yeah.
profit on the trade is 250.
Yeah, correct. Yeah.
Divided by your entry price 350.
Yeah.
You're making 71% return.
Correct. True, sir.
In a deep OTM option, you
Okay.
might have got an entry at let's say about 56 rupees.
Yeah, 56. Yeah, okay.
Right?
Okay.
This 50 may go to 3 times or 4 times also.
Okay.
Now, if let us assume this 56 rupee option went up and became 150.
Okay.
So 150 minus 56.
80.
Oh, sorry.
94.
150 minus 56.
Yeah.
94 rupees.
Yeah. Okay.
Divided by my entry price.
56.
I made 160% profit, no?
Okay. Okay. Okay.
In percentage returns terms,
Okay.
your OTM options will give you bigger percentage of gains
Compared to in the money.
compared to ITM.
ITM. Okay.
Now, I don't look at risk reward ratio. I don't say my stop loss is 20 rupees. I should get at least two times that as my reward.
Okay.
I'm not interested in 40 rupees gain.
Okay.
I look at multiples of my capital as my RR.
Okay. Capital RR. Okay. Fine.
Right. Minimum I want is 100% profit.
Okay.
Sometimes it can give you 300% profit. Sometimes it can give you 800% profit also. If your trend is very strong and the momentum is there behind that move, you can have multiple times your capital as your profit. My capital has grown in one particular expiry day, which turned out to be a very nice bearish day.
Okay.
My capital grew by about 12 times.
Oh my God. Happens, sir. It happens in expiry. Like.
And there was another case where I had a call option.
Okay.
Which went into a loss. I bought it at 43 rupees or something.
Yeah, correct.
And
both
it went
happens, sir.
down.
Both happens.
And finally, what I did was I averaged a call option.
Okay.
Somehow my mind was telling me that what is the worst thing that will happen.
Okay. Okay.
So I had a 10 lot entry on a call option at 42.
Okay.
And finally, I averaged it with another 50 lots, so that my average price was 15.65.
Okay. Is it a good idea to average, sir, or like square root of both?
It depends. It depends on how you read your possibilities of up move or down move. Plus, it depends on your ability to take an increased risk.
Yeah.
In this case, I took the increased risk. Like my average price of 15 rupees on 60 lots.
Yeah.
Was my risk.
Okay. Okay.
Luckily for me, it was 34,000 C which I was playing with.
Okay.
It went up to 409 rupees.
Oh.
Okay. These kinds of things can happen in the market.
Yeah. True, sir.
Hello, sir.
Especially in Banknifty.
I wanted to add a point. Hello.
Mm-hmm.
I just wanted to add a point. We see option chart, right? After option normal chart, right?
Yes.
Then, as you said that if the strength is weakening in uptrend, we'll see a down wick in Heikenashi candle, right? So we can use this for trailing also.
I've tried trailing my stop losses in options chart. Unfortunately, I have not been very successful because it always threw me out of the trade halfway. And then it went up by another 100 points.
Okay, what I said is, first of all, we'll take the trade in the option chart, then we'll shift to Heikenashi, right? And whenever we are riding the trend, right? And whenever there is a down wick in uptrend, I mean, whenever there is a down wick in a green candle, I'll trail my stop loss there.
Let us see this 12:15. No, look at
Yeah,
your
I'll
normal
trail my
candle.
stop loss and suppose
Yeah,
we
you
have entered here,
could
right?
trail your stop loss here, but in any
No,
case,
not in normal. I am saying in Heikenashi.
yeah, boss. No, after you see the Heikenashi, the price you see on the
Yeah.
Heikenashi is not a real price. No, it's just an average price.
Okay, okay, okay.
Ultimately, you have
So,
to deal with the actual price only. That is on the normal
no,
candle.
sir. What I mean to say is when I'll trail my price wherever I'll see a up candle, up wick. I mean in a uptrend, whenever see a down wick,
Correct.
I'll
So
take my
look at this
price
candle.
there.
No, at 12:15, you had a small down wick.
Yeah.
Okay, it
Yeah.
shows that the strength of the trend is gone. Trend has become
Yeah,
weaker, right?
Yeah.
So you would ideally look at either exiting on this candle, or as you said, you
Yeah.
trail your stop loss to the low of this candle, which is 335.25. You are saying.
In uptrend, I am saying. In
Correct.
downtrend, I'll put my stop loss too high.
Correct. You're right.
So we can do that. We can trail likewise.
You can
That
try.
is what I was adding the point.
Yeah, you
I'll
can try
try
that.
and I'll come to you because I think that can work.
If it works, well and good there for all of us.
Yes, sir, yes.
Can I share something, some observation I have?
Yes, please.
So, if you put a simple 8 EMA on your chart, just put 8 EMA.
I refuse. 8 EMA will talk to me about what has happened.
No. Just, what I observe in that chart, when you are in a trend, say for you took a P or C, whatever you have taken, when your opposite color candle will touch the 8 EMA, it will usually give a exit signal.
My dear friend, your exit signal will come a little bit late, no?
ATMA, say for in a not in option chart. This is option chart.
No, this is a spot chart for not even spot chart. This is a crude oil chart.
No, I'm talking about Banknifty.
Wait a minute. Let me put this first.
Not EMA, sir. Not moving average, sir. Exponential moving. Yeah.
Exponential moving average. Fine. Then I'll change it to Nifty Bank. Yeah.
Say for you took a trade here. Whatever you took a trade from low to high, when the first red candle touched the 8 EMA, you exit. You see, on most of the cases, when the opposite color candle touch the 8 EMA, you exit from the trade. You check in the most of the cases in a trending market. 90, I check maybe 80% cases. I have seen the same scenario.
Go ahead and use it.
Hello,
No,
sir,
I'm not very convinced using moving averages and all on my charts.
Swaminathan,
I've
sir,
tried all kinds of systems. I
hello,
have never really
sir,
felt comfortable with that. If you feel comfortable with that, please go ahead.
Right. Just for exit.
Yeah, I understood that.
So whatever I said right now about the stop loss trailing, shall I explain it on my screen?
Yeah, please, sir. Let me stop my
I'll,
share.
I'll try to. Yeah, I'll try to once. Only the start your video.
You have the permission. After the Swami sir stops sharing, you can
I
share.
stopped it. He can share. Click on share screen and start sharing.
No. Only the host can share in the meeting. It is written here.
Try it now.
Okay.
Please.
Okay. I'll try. So 15 minutes, right? Just a minute. Let me remove once. Suppose we have, let me put in Heikenashi. see, suppose we have taken a trade here, right? 1 1. Just suppose, sir, 1 1 1 1 1 5 70. We have taken a trade here. There next candle there is no upwick. Here also there is no upwick. Here also there is no upwick. Here also there is no upwick. I see a upwick here, so I'll trail my stop loss directly here.
Okay.
And whatever it will hit on its own here. So
Correct.
it's a good idea, I guess.
I suppose so. It could work.
But this can
because
throw
I
you out of
tried.
the trade also very early. Remember, this I have done this thing, and it throws you out of the trade. Actually, what
No
you
worries,
do
sir.
is,
Even
even
if
if you start trailing to the higher of the normal candle, one wick will come and it will hit you very badly. And you are sometimes pull back. Normally, see if what is a pullback technique is whenever a thing is falling, the buyers will come and try to pull it back once at least. And if you start
sir,
trailing,
see here also. Sir, see here also. Suppose we have entered here, right? At the high of this, okay, 1020. So I see a down wick directly here. So I'll put my stop loss here. Even if you have to exit, we'll exit here. But even if you have to trail your stop loss, you'll get auto exited here. So I
Will you
think
keep
it
on moving
could
your
work.
straight?
We'll have to.
Will you keep on moving your trailing stop loss or no?
Yeah. I'll keep moving. Whenever there is a down wick, I'll
See,
trail
what
my
I
stop
used
loss
to
there.
do earlier was against each green candle low, I used to keep moving my stop loss.
Why I tried this, sir? Because you said as there is a down wick, the trend weakens, right? So I thought we'll do like this.
Correct. You will still give up a portion of your profits which you could get. Number one. Number two is I tried this many times, and just one spike like this will throw you out of the trade, and then again the market will start going up. That is a painful thing for you.
Yeah, I can understand. But for I think, shall I try it and tell you the results or?
Please go ahead. It's your money, your time.
see,
Okay, so no
actually,
issue.
I don't know.
Yes, sir.
Shubhamji, we will be
Yes,
restricting, and I will advise all the members to follow what Swami sir has said. Please do
yes,
not
sir. No
try
issue, no
to
issue.
modify it right now. See, modification will come when we are already in perfection, and once we are in perfection, then
sir.
you can do, then you can do it on a smaller time frame. Like Soumyadeep, I have seen him. Even on a very bad day, he is so good scalper that he will, even if he's 20,000 down in Banknifty, in one of his scalping technique, he's going to make the recover whole of the money and take some money out of the market and take home also. So to achieve that level, a person who has only mastered Banknifty he can do it. For us, we are just started to sit on a
Yes, we have
bicycle.
started.
Let's not start to race. We should not race. Let's
In fact,
learn to paddle. We will fall. We will have some injuries. That is part and parcel of the game. If anybody is scared of of his stop loss being hit, he should better not do it. Because Banknifty is a volatile structure. Moment you put in your orders and your stop loss both, it may go in matter of seconds. Both of things are gone. So I have seen many times that the moment I used to put my stop loss also, it used to get hit immediately. But that's part and parcel of the game. So you can't crib on these things. These once you have the stop losses, then only you are going to get some kind of a you suffer the pain. Then you are going to modify. You have to increase. You will try to do something better. Get more understanding of it, and then you will be profitable. That is a basic line. Whatever you want to follow in toto. I say everybody, even if you follow moving average 10 and do Banknifty, you will be profitable one day. You will be ultimately profitable, but you have to follow one system. This system is good. There is, at present, we need to only follow the basics of what we have been taught. If you lose 20 points and get 200 points, because if you're losing 20 points on one side, you're bound to have an entry on the other side. So you have to be damn unlucky that all your 5 stop trades are going to get hit. One of them will give you 100 points on either side. No? So that will take away the 80 points you have lost and 20 points which it has given you as a bonus for your hard work. So this is how I take that trade.
I can
Swami
understand,
sir,
sir.
please correct me if I am wrong.
No, you're right. What I suggest is that you follow the process exactly to a T. Later, you can sit and do your modifications, and you will suddenly have some bright ideas about how to improve the system. And typically, any new system somebody learns, his first tendency is to mold it into the way he likes it. Okay, which will take away the beauty of the system, number one. And everybody feels that I have to adapt it to my personality type, my emotional quotient, etc. If you try to do that, you're going to fall flat, and you'll never have a winning trade. Like, for instance, supposing you take 4 stop losses in a bad day, and you say, I'm fed up, I'm not going to trade anymore today. The very fifth trade which you get could have wiped out your stop losses and given you more than 200-300% profit also. See, when you trade a moving average system, right, crossover system, let's say you are a systems trader, you are an algo trader, whatever, you have defined rules. When moving average, slow moving average crosses below this fast moving average, I'll sell, something like that. Okay, whatever you are defined into your algo, unless you take each and every trade, you are going to have a serious problem on making profits, because you never know which next signal is likely to be a blockbuster hit. You will have sideways periods when all the moving average systems fails, just like our Heikenashi method also will fail. Okay, but if you ignore one or two trades at your discretion, then you're going to be in a whole lot of trouble, because you have missed out a big profit potential. So you
I
need to take
admit
all the
to
trades.
I
Luckily for
admit
you,
to
the stop loss is so small, it won't make a big dent. And that is why I say you please follow a money management rule that for every 10,000 rupee capital, you only trade one lot. You may feel I have got crores as capital, I don't mind taking the risk. Believe me, that crores will just evaporate. Please don't take that risk. Take some small baby steps first. Once you know you're confident in walking, then you start taking wider steps and try to walk faster. Otherwise,
I
you're just
agree
going to
to
land in trouble.
I agree to what Swami sir is saying, that if you miss one of the signal that which is going to wipe out your losses is absolutely true. In my case, at least, uh, in my life, 3 days I had Bank Nifty running in my way, so I wiped out the losses. But next 3 days were not the way I wanted. So I traded the only first three signals and left the remaining two. So I lost 60 odd or maybe 100 odd points in Bank Nifty on a single lot. But the fourth trade which I missed gave me 300 points. So if I missed the fourth step, it would have been 200 points plus for me. So this is what is the beauty of the system. But if you hold on to the rules and regulations, even if it's said in moving average, if you trade on a moving average, your 2 or 3 trades are going to be very bad for you. But the fourth and or the fifth one will give you huge profit. So this is how what is. I will request everybody to stick to the what is being taught to you until you don't master the cycling Bank Nifty. After you must learn cycling in a Bank Nifty, then we can have a race. Who can scalp better? Who can be a better rabbit? And who can be a simple tortoise?
And to add to that, like if you establish a bias, let's say, if you say that if the price is above the open, I will not look at a PE trade. I will only buy a C and make my profit and be happy with that. You will always be on the safe side of a trade. Simple reason is you trade an impulse move and not a corrective move. This is a corrective move, right? This is an impulse move. So you keep on trading the impulse moves and hope that the corrective moves will not distract you. In which case, you can still be very efficient in option buying. The reason I ventured into all these things is that I was always like all of you. I have also read thousands of books and watched hundreds of courses. Everybody says option buyer is a long-term loser. Why do they say that? They say that because most of them are used to holding the option till the expiry. Whereas I'm not going to hold it till expiry. I don't have a problem on theta, decay, and all those things. For me, intraday trade is just like a stock trade. I buy, get out with a small profit or a big profit or a big small loss or a my maximum loss anyway can be only the premium I paid. That is the absolute worst thing that can happen to me. The moment I know that my risk is already measured and it is acceptable, I don't need to worry about my trade at all. Even if I'm wrong on a given day, it is not going to wipe out my capital, right? And if you keep trading with the larger trend, in fact, I shared one book in the group where there's a guy who is actually a trading psychology coach. That guy trades a similar kind of system. What he does is he puts a MACD on his chart. On the daily chart, he looks at the MACD. It is above the signal line. He doesn't look at entries. Then he goes to the 30-minute chart and puts it on Heikenashi. Right? He waits for a pullback, and once the pullback is over, just like we do, he enters on the high of this and takes his profit. Now, the difference between his method and my method is that he tends to carry over the trade for the next 3-4 days, which I don't. I like to close my trades, profit or loss, on the same day. It doesn't matter to me. The advantage for him is that he trades in the money options so that he gets faster moves and quickly exits with a small profit. His logic is small profits many times during the month will take care of the growth of his account, which will then be able to even withstand a larger loss on one trade. That is his logic. Somehow I don't subscribe to that logic, so I prefer to trade my 15-minute Heikenashi method.
For information of all the members who are still remaining at 11:30 in the night, I remember a couple of weeks back, Swami sir had bought 34,000 CE at I think so, an average of 15 rupees, and he had you had 60 lots.
Yeah.
And you closed it at 109 rupees.
Not 109, sir, 400 something. 384 or something I closed. It went up to 409.
Oh, yeah. It was 300 something. So you have an average of 15, which is going to 384. Just try to multiply and calculate in your mind what it can give. If you had been a scalper, you would have been 100% out of the trade by when it was just trading at 50 or 60 rupees. So this is what I remember that day. I exited being a scalper. I exited very early because I said a bird in hand is better than two in bush. I never knew there were two big peacocks in the bush, which couldn't escape me. So that is how the system works. So everybody has to stick to the basic, and let's keep our fingers crossed. And we should be able to master Banknifty under Swami's guidance to a great extent.
You could also do one more thing, like on most sideways days, you'll see that the price struggles within the first 15-minute candle. It gives a breakout, even then it's a small, false breakout, comes back within this range and struggles within this range. In such cases, you might have had, let's say, 1 or 2 stop loss hits. At that time, you can just stop and quickly move on to our stock option trading. Pick one stock from the top gainers list and start trading that. So instead of continuous losses, next maybe 3 or 4 losses you will have on this day, you could probably have a stock option trade, which is about gives you around 60% profit. So that is one more way of trading. When you don't see a potential in Banknifty on a given day, quickly move to stock option, trade some stock option, and make money, which is what many people in our group do. And
They jump from Reliance, L&T, Mahindra and Mahindra, Bajaj Finance.
Neither we don't select stocks that way. We select only from the top gainers, top losers.
Yeah. That is what I was following them for quite a long time. So I could remember the name of these stocks. So I have seen them trading.
Yeah.
And they all did very well. I think so. I remember Mahindra and Mahindra gave them a huge, it was a PE trade, I remember. And it gave a good trade to the person who had taken it. So even if you follow whatever is given in the group blindly, I think so you will end up in profits.
Any other questions?
I think so, sir. It was a very exhaustive session for all of us. And
for me, this is a normal session actually. Sometimes our sessions go until 1:30 in the morning.
Yeah, I know. I've been part of it.
Excuse me, sir. Can I speak something, sir?
Sir, actually, I'm just new to this share market. I got this message through one of my friend, and I joined the class and tried to learn something. But I don't know what group we are talking about, sir. I don't know. I don't have any. I am not a member of any group, and I want to start. But generally, what the impression, like everybody has shown me. There is a great loss and risk in this market, so don't go. I am 52 years old now. So should I go or?
Should I go means what? Should you trade or not?
Yes, exactly, sir.
If you ask me, I will always say you should trade with proper training, and you will definitely make a lot of money out of this.
So you are talking about some group because I don't.
No, we have a Telegram group which was formed only to discuss about this Heikenashi method.
Okay, sir.
And that group is called HA Price Action.
Okay, sir.
So I think Kamalji can give you the link.
I will just copy the link. I will just put the name. It is HA, both in capital, space, price action.
I'll write it out on the chat box if you can see it.
Just let me see.
Yeah, Vikas has already put it.
Yeah, this is a group where you just, sir, I don't know your name, but just try to sit and follow what they do is. Whatever trade they do it, just open up the chart and see how precise entries are.
Okay, sir.
Learn from them and then try to take a similar trade at a different strike price and see what the result is. This is how the actual learning starts.
Okay, sir.
So I used to put the Telegram. I have the same number Telegram activated in two of my mobiles. I used to put one number activated and I used to put it there and I used to keep on reading the message.
Okay,
And the moment they used to say anything, I used to immediately put on the chart, mark the entries, see it whether it's right or wrong. You will be tempted. I'm telling you, this is from personal experience. The moment you are reading such a beautiful messages and you think that each message is going to bring you to at least a couple of thousands into your pocket, you are tend to jump into the trade. Please desist from doing this because that is the place you're going to make the maximum mistakes. And I did it. So I jumped in because there are people who have modified the technique according to their liking. They are not following the original one. And invariably, when you bend the rules, you are always on the other side of the law. So you tend to have losses. So I'm being absolutely clear on this thing is, this is my personal experience. This is personally what I have found it. There are a couple of very good people there. Swaminathan is awesome. He's awesome. If he can turn a red day into green very easily.
Sarji, he started with 20,000 and today his capital is around 4 lakhs in a matter of about 22-25 trading days.
Actually, so 20,000 is, I think, so the minimum profit he takes a day.
He has now crossed 1 lakh plus profit every day.
Oh my goodness.
He's good. He's good, sir.
See, he's good because of only one thing, blind faith in this method, and he keeps taking every entry he can. His rules are also very clear. If I'm in a CE trade, I will not look at PE trade until either my stop loss is hit or my profit target is hit and I'm out of the trade. Only after that, he will take the opposite direction trade.
And he is a good scalper also. Once he
Yeah.
finds out the bank nifty is a sideways movement, he will immediately turn into a scalper.
Correct.
This
He
is
will
what
take
I- then he
1:1,
keeps on
1:2
scalping every
risk
option.
reward, and he will keep taking profits.
Yes, sir.
I'm not.
Even Santosh is good, sir. Santosh
Yeah,
is
yeah.
also good.
Santosh is good. I mean, there are quite a lot of people who follow that. Some people get, sidetracked by other people talking about volume profile and trading view indicators and all those things.
So that is the where I asked you to step in, because it was very confusing for me.
I know it was quite irritating for me as well. So I said we'll have to stop that. In fact, I put a ban on sharing charts and entry levels in the group, saying that let the others learn on their own. We can't keep spoon feeding everyone, right? As far as the gentleman who was speaking just now, saying he's new to this stock market, I don't know his name.
Sir, my name is Akshay.
Akshay, okay. Akshay, if you're totally new to the stock market, please invest some time to learn.
Okay, sir.
Right? Don't just jump into an option trade without knowing what you're doing.
Yes, sir.
Though I would even go so far as to confidently claim that even a beginner can do this. You need to have some basics at least.
Exactly.
Right? You don't need to know the depth of options, and there are so many things they call as delta, theta, vega, gamma, rho, and all those things. All those things you don't need.
Okay.
Those are all some stupid mathematical fellows' way of computing the option pricing. We don't need to know it.
No, basic.
What we need to know is,
sir, what I'm planning to learn actually, what are the main, the wordings you are using in that. I could not understand because as a beginner, I don't know ABCD about the stock market.
Then you need to read a lot, Mr. Akshay. Then you need to read a lot.
I'm trying to do that.
And I can bet on this thing. Most of the people do not understand an SLM order. I can bet on this thing, sir.
Correct. Not
I
many
can
people
bet
do
on this thing
understand.
because people who are not using Zerodha will not be able to understand what is the SLM order. Because this is the beauty of the Zerodha, that you place in on an SLM order and it just activates it. That is where it's the beauty. It's the moment it gets activated, now you have to only put your stop loss and then you just forget it.
Thank you very much, sir.
You're welcome, Akshaya.
I got your number, sir. Sometime I may trouble you, sir.
Yeah, send me a message, preferably on Telegram.
Yeah. Thank you.
Right. Many times my phone will be on silent mode. I don't pick up the phone usually.
Hello.
Send me a message on Telegram. I'll get in touch with you.
Thank you. Thank you, sir.
You're welcome.
Hello.
Yeah.
Hello. Yes, then you have told that 22 points should be kept below the entry point. So that 22 points is the Nifty Bank 22 points. So option amount, how it will be calculated?
Hold on. The 22 points of stop loss, which I mentioned, was in specific relation to a strike price 32,900 call option.
Okay.
For tomorrow's trade. I mean, it incidentally happened that today also this particular strike price did well. It is not always 22 points, number one. And your whatever number of points you have as a stop loss is determined on the option chart, right?
Okay.
You have something called an entry candle. Entry candle is the candle whose high is broken by the subsequent candle. Okay, that is where your pending buy order is. So if your entry is at, let's say, 250 rupees, right? The low of that particular candle, normal candle, will be your stop loss. It can be 22 points, it can be 30 points, it can be 50 points also. But as you go deeper out of the money, your stop loss could come to less than even 10%.
But most of the cases out of the money, actions are very slow.
Let them be slow. What is your problem?
Okay.
What you are interested in is your 100% return. Okay.
Yeah.
Now, instead of buying one lot at 220 rupees, I may prefer to buy 10 lots as 20 rupees.
Yeah, yesterday itself is happened to me. 400 rupees I have purchased by Banknifty and I sold out at 150.
That's what I'm saying. No. See,
was
what
That is not
typically
your.
would happen.
Then I will like to interfere. Interrupt you here, sir. Your money management rules are very poor. If you are selling a thing you bought at 400 rupees at 150, your stop loss should have been close to around, but let's say maybe 300 max, or should be somewhere around 350 according to this technique. So it's being, see, if you limit, you think that today I'm only going to lose 1,000 rupees. If my 1,000 rupees is lost, I'm not going to trade. That is the way you're going to make money. Because you have to be damn unlucky that you lose on all the 25 trading days or maybe 22 trading days. If you follow one system, whatever you may do,
I understand, but normally suddenly it is hitting the stop loss. Most of the cases it will hit the stop loss.
Sir, just tell me one word. Just tell me one thing.
If
you
you
are going to be
entered your
unlucky
trade
for the 25 days.
If
No,
you
no, it will
entered,
not be so.
if you entered into a trade at a wrong location, meaning not at support, not at resistance, if you enter in between, you're bound to have such stop loss hits.
Okay. Yes,
Number two, if your stop loss is not scientifically placed, then you're bound to get your stop loss hit. Why do I keep my stop loss in this example at 22 rupees? Is because I know that this is the lowest price at which I can enter the trade. Correct? Out of the first three candles, the lowest price at which I enter the trade is 214.45.
Yeah.
Right. Now, below this, if it has to go, that means there has to be a trend reversal and the momentum has to drastically shift to the downside again.
Understand. Yes.
So, unless you see a momentum turning, you don't enter the trade.
Okay.
How do I do that? Instead of waiting for this candle to form, I say if it crosses the high of this candle itself, I'll enter. Correct?
Understood. Okay.
So you need to work on your entry level, which is
Yeah,
key. If you enter at the wrong place, you are bound to have stop loss hits.
Yeah.
Right?
Thank you, sir. Yeah.
So can I ask a question, sir?
Yeah.
Okay, sir. Well, yeah. We'll remain there, sir, on the screen. 32,900. Yeah. Now, sir, as at the end of the day, let's say we continue. We see a sideways setup with with many shadows up and down.
Correct.
How are you reading this? How are you reading this here?
I don't read this at all. I don't even need to. I finished with my
Because
trades.
sir, that's okay, sir. Let's say the day is continuing. Let's say the
Okay.
day is continuing further.
If the day is continuing further, what I would have done is I would have taken an entry after this high was broken.
Okay.
Now, if I'm lucky and the stop loss does not hit on this candle, I'm still in this CE trade.
The second candle broke, sir.
Yeah, second candle broke and I'm gone out of the trade. Then again, I get an entry signal next candle, right? High is greater than this.
Yes.
So if I taken this trade and the stop loss is not hit, I will continue to hold the trade for the subsequent period.
Got it.
Assuming it's not end of the day. If it's almost end of the day, I just don't take the trade.
I got it. There's another question. At the beginning of the session, the webinar that you started, there was something that you mentioned which I couldn't catch it. That was about drawing a what do you call, support line or something like that?
No. What I said was, please draw a line at the opening price of the day. Right?
As the market starts at 9:15, right?
Correct. At 9:08, your pre-market session would have ended and you will see some number here.
Okay.
Now the pre-market session is conducted basically to evaluate various orders which happened overnight. There are after-market orders which are being placed.
Right.
There are buy today, sell tomorrow kind of traders. all these people's actions, all these guys have got orders, no, which are pending in the system.
Right.
So the buy orders and the sell orders are weighed against each other, and a weighted average price is arrived at to determine the opening price of the day. Your entire pre-market session only decides the opening price of the day. It has nothing to do with the trend, etc. You don't think if it is green, I should trend will be green or something like that. It doesn't happen that way. So what you do is you mark your line at the open price. If all the price action is predominantly trading above the open price, your bias for trading should be on the call option side.
Okay.
If the price action is trading below this open price, your bias should be towards the put option side.
Okay.
If you trade according to that bias, you could end up having a slightly more higher probability trade. But having said that, once you are in this trade on the call option side, you see a reversal signal happening here. This low is broken, green candle low, right? Which also happens to be a Heikenashi green candle. Once this low is broken on the normal candle, you are saying that there is a trend reversal.
Right.
And you are now good to go for a PE trade.
Yes.
But your opening bias says you should have taken the CE trade and left it at that.
Right.
Now,
Remains
do
for the
I
entire
take this trade or not? Was a big question mark all of us used to face. Okay. The reason I call this opening bias is only for my opening trade. After that, the price action has to tell me where to go, right?
Right.
So I'm not wrong in taking a PE trade here on this reversal.
Agree.
Right. It was in fact to deal with this kind of thing. I said, let us remove this opening bias. Now, the opening bias was included in my vanilla system. Then I saw too many people saying, should I take this trade, not take, all those things. That was becoming an endless discussion. I said, do away with all these rules here. You trade according to Heikenashi. Whenever the color changes, you take the opposite direction trade.
Okay.
What is the worst thing that would have happened? This trade I wouldn't have taken. I've taken a buy trade somewhere here. Okay. I went up, color changed. I moved into sell trade.
Right.
But on a day with this sideways, you will get multiple such signals.
Yes.
Up and down and up and down. Many of them will hit your stop loss. That is the additional risk you carry of not trading with the bias.
Right.
All right.
Right.
So it depends on you how you want to trade, but I would suggest that you trade with this opening bias, take the CE trade. Then after that, if there's a valid reversal signal on the underlying, which is the Banknifty spot,
right,
look for a PE trade.
Right.
You will find that it exactly coincides around the same time. 12:30 is where you got an entry. And here also you see 12:15 candle, high is broken by 12:30 candle. This is where you're in a trade on the PE side. You're pretty much comfortable there also.
Yes. Thank you, sir.
So what I normally do is I trade the daily candle. Okay, I don't like sitting and looking at my 15-minute chart, waiting for entry and all those things. What I do is I just go into the trade in the morning. First thing, as soon as the market opens, I go ahead and buy a put option here. I keep doing this based on my past 2 days prices. I look at where the price is in relation to the past 2 days prices. Technically speaking, I am still in an uptrend.
Right.
But compared to today and tomorrow, my close price is lower than yesterday's close price.
Yes.
So actually, I should be taking a downside trade tomorrow.
Right.
So what I do is, at the open itself, I place my order for a PE trade.
Right.
I don't look at whether I'm entering at the right place, wrong place, and all those things. It's a kind of a risky trade because supposing the price goes downward tomorrow as per my expectation and forms a deep red candle like this or whatever this,
It's a big gain.
then it's a big gain. Minimum 300, 400% profit I'll take.
Yes.
Now, supposing I'm wrong in my assessment,
So loss is minimum.
my loss will be there to the extent of my premium which I've paid.
Right.
That is why I take a deep OTM option.
Yes.
When I'm trading this, my
Yes.
loss will be smaller if I'm wrong.
Yes.
If I'm right, I may end up making 300% profit.
Yes.
This is the way I trade.
Yes. This you explained the last time too. Yes.
Correct. But I would strongly suggest you follow the 15-minute Heikenashi method. This will give you more high probability trades. It will keep your losses very small per trade. And sometimes it can give you huge wins, which you could never imagine in any other trading instrument.
Okay, sir. We'll do that.
Yeah. Right now, don't go by the daily candle method.
Sure, sure.
The daily
Got
candle
it.
method, I am used to taking a few losses here and there. Like last 1 week, this entire month, I've been taking only losses, excepting on this day where my PE gave me profit. Rest of the time, I ended up becoming wrong, but I knew what is my loss limit. No.
Yes.
As long as that is acceptable to me, I just continue to trade that way.
Yes.
But parallelly, I also look at the 15-minute candle and enter into some quick trades in these things. If I'm seeing profit potential here, I would definitely jump in and take the trade.
Yeah.
So at any given point of time, my daily candle trade will be running, and if it's got a strong momentum candle in its move, I win big. My loss is small in case I lose. So this trade will be always on.
Yes.
Parallelly, I also look at these small things and start trading.
Right.
So on any given day, probably I will not have a big loss. The loss on my wrong entry here will get nullified here in these trades, 15-minute trades. Sometimes both of them will be in big profit, which is additional bonus.
Yes. So here, sir, just a moment, sir. Here, can I continue with another question? If
Yeah,
anybody,
please,
if
please. I
anybody
have
wants
all
to
the time.
comment. Yeah. Sir, one daily, sir, daily where you are doing, sir. The daily where you are doing.
Actually,
Here
this
on the
candle has changed now because it's exactly midnight. Zerodha will take some time to reset its chart.
Okay.
The last candle will not be visible now for next 5 or 10 minutes.
Okay. So this, you said on this particular day, that the day on the 21st, I suppose, the green candle, the big green candle.
This
Where
one?
did you, I mean, no, sir, 21st. Yes.
This
How did you,
22nd.
22nd, yes, sir. How
Yeah.
did you think of entering? Because it opened low.
Yeah, what I did was, after the price opened, my first instinct was to buy a put option.
Yes.
Right? I bought the put option.
Right.
Then I saw that price is going up and above the open. So I hedged my position with a call option.
Okay, okay, okay. Got
Right.
it, got it, got it.
The reason I was not suggesting the hedging part of it is that on days when you have both up and downward movement, you will lose on both sides.
Right.
It's better to lose only on one side, no?
Yeah.
See, typically in this kind of method, though you have a lot of losing days, these big winning days will take care of all your losses and give you sufficient profits. Like for instance here, you would have been in continuous profits, excepting on a few days.
Yes.
And those are big wins. Typically you're making 300% a day.
Yes. Thank you, sir.
You're welcome.
So really hats off your patience and your teaching method, because I spent more than 50 to 60,000 rupees for only learning. Not got such a nice techniques.
Sir, one question here.
Tell me.
on option chart, sir.
Haji.
Today after 1:30 at the 1:30 in a call chart, we got an entry according to our system. Is it right or not, sir?
We got an entry at 1:30.
Yeah.
1 second, let me close this. Yeah, you did get a small entry here.
Above that candle high is broken.
Correct,
According to
yes.
system, we are in a trade. Okay, na?
No, but you are already in a PE trade, which
Sorry, it's
around
all
115. Yeah, fine. You're right.
okay. Next question is when you explain to option sellers in a put chart, first candle is almost green in Heikenashi.
Correct.
Then why you put sell order on second candle's low? We can sell on first candle low, na sir? Because first candle is complete. Now I have to wait. That candle's low is broken in normal candle. So first candle's low almost broken.
One
so
second. Yeah, you're right. First candle low was broken. Yes.
Okay, sir. Okay. Thank you. That was I want to confirm it, sir.
If you want to be a seller,
yes,
right, you go ahead and take the trade. Only recognize that your stop loss is much higher.
Yes, sir. Yes, sir.
Right.
Now I
that
just
if you enter on the second candle, right, you would have a safer trade all the way down, and with a smaller stop loss.
Yes, sir. Yes, sir. No, just I want to confirm entry, sir.
Yeah. See, what I normally say is when there is a green candle in the beginning itself. Now I'm talking from the point of view of an option buyer. I'm saying there is a bus which is leaving your bus stop. You're running to catch it. Now, if you run too far away, you're closer to resistance and the price is likely to tumble down. So don't take a price buy entry against a green candle. That is our first rule.
Yes, sir. Sure, sir.
The reason is I don't want you to catch a running bus. The bus will ultimately come to your bus stop, after which you board your bus peacefully. Unfortunately, patience is the name of the game in this trade. You'll have to wait very patiently. So what I do is I keep looking at both these charts simultaneously. I see which one is likely to give me the entry first. Whatever is giving me the entry first, I take the trade.
Yes, sir. I took both entries today.
Yes, that is a fantastic thing. No, 100% gain on both sides.
Yes, but
what more could a person want?
Sir, but my target is fixed for 20%. So
sir, you have to come out of that mindset. Okay.
Sir, but our temperament is not as same as you till now.
No.
We are trying to.
Sir, in a mechanical system, where is the question of temperament, sir? Only thing you need to avoid is stop pulling the trigger. Keep your hand away from the trigger.
You are right, but it take time, sir.
Sir, after you enter the trade, put a target order for 100%.
Yes, sir.
Okay. Just let the trade run. Only thing is your broker will ask you for extra margin to be kept.
Swami sir, I'm stopping you. Sir, you're not well, sir. Just now somebody has put up in the chat.
Sir, all 5 members of my family tested positive for COVID today.
Sir, we will keep the session. We will end the session here.
No, sir, no problem. Anyway, we are
sorry,
started.
sir.
Sir, I come from a medical fraternity. I know you need to take rest. I will step in as the admin, sir, and I will please request everybody. No more questions are allowed, and we will take up this when sir recovers, sir.
Yes,
sir, take rest. God bless you. Anything I can do, sir, please do ping me anytime.
No
I
problem,
will try
sir.
to arrange it at university, sir.
No problem, sir. Thank you so much.
Good night, sir.
Thank you so very much.
Thank you, sir. Thank you very much.
Thank you, sir.
Thank you.
Good night, sir.
Good night.
Thank you, sir. Good night.